following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome, everybody, to another excellent edition of the Power Trading Hour, where we come to you every day at this time.
The following takes place between 2 p.m. and 3 p.m.
And what do we have going on in the markets today? Well, a little bit of action, a little bit of country, a little bit of rock and roll. S&P's up 9 points at 2317, volume 2.15 billion shares. So just a tad better, still nowhere close to the 5 billion shares that I think we should be seeing up here at these levels. Options and option market makers are buying huge amounts of protection starting about midday yesterday and in today. They think this market is headed south next week in a hurry. So we'll see if they are right. For me, the risk reward is just pretty astronomical here. Some of my early more generalized positions, ETFs, didn't do so well, but I've got some individual stock positions that I think are doing well. In fact, I have one that is the textbook of all textbooks for a monster move, and we'll see. But again, as I said, over the last few days and even weeks, my puts on a lot of these things are out in March and April, and I'll probably go to May here next week when I add my next position. So I still think that we could pull back rather significantly, and I don't know what that event's going to be, but I can guess. One of the things that was very interesting yesterday was the advance of the dollar off the bottoms. It's printing 180 cents when we look at the March 17th contract, which is DXH7. This thing did get to 101 today. It looked like the government threw a bunch of cold water on it, just hammered it within about 20 minutes. But again, could not keep it down. It got back to where it took off from yesterday, which was about 160 cents. It's back up to 1080. I think that there's very few things that the government over the long term can do to keep this thing down. My guess is that, and I said it, I guess the last couple of days, anything over about 1080 gets into the squeeze territory because so many people really kind of got short late in this thing, thought it was going to blow down and through the 100 level, and it did not. So I'm kind of a dollar bull here. I'm kind of a bond bear. I don't think there's a lot of places to hide in the coming weeks and months. And while there'll be some short-term action, maybe intraday trading action, or even maybe 1 or 2 or 3 days, my view is way down the road. Like I said, March, April, and probably May. There's a lot of things that are coming together. But I see many of the best and brightest from the street looking very hard at lower prices. Now, am I saying the wheel's going to fall off the wagon, market's topped, everything else? No. I just think that we need to go back, recharge once more. Kind of like, we've had a couple of days where we've gone back for 1 or 2 days or 3 days and then rallied right back up. I think those days are kind of over. If you listen to Steve Rhodes' show earlier with Trim Tabs, I've talked to that gentleman several times. I like his data. After reading his newsletter and what he puts out, I would prefer to read his data and probably spend a lot of time on the analysis. I think normally I can put it together with what I'm doing a little bit more. And two, there aren't a lot of sharp edges to that. It really, if you want to get that, and I do recommend it, But really, if you want to get that, it is for the raw data so that you can make informed decisions about what's going on. But I don't know what else you can say about it. Did enjoy the interview, but a lot of things that he says out there, a little controversial, but I can't say they're wrong. I just can say that I can come up with a different scenario for his set of facts. So correlation is not causation, and just because someone has data that may be true does not mean their conclusion for that data is true. But we move on. As always, we like to start the show with a little history.
And it's all just a little bit of history repeating.
Dr. Martin Bailey, chairman of President Bill Clinton's Council of Economic Advisor, declares, and this is on this day in 2000, the fundamentals look very good. As long as we stick to sound policy, there's no reason why the nation's economy and economic expansion, now 107 months long, cannot continue indefinitely. By year end, the economy is heading into recession, as the famous last words of many out there. And that is, you don't know what you don't know. I always love that great piece by Michael Crichton, the guy that wrote The Andromeda Strain and Jurassic Park. A lot of great books. He was a man that was one of the few guys, they say a man for all seasons. If you can write and direct movies, if you can write a good book, if you can be a award-winning, I think he was a heart surgeon. I mean, the guy was literally everything. He was the guy that should have probably been on the ad for the most interesting, truly interesting man in the world. But he has a great piece called Why Aliens Caused Global Warming. And he doesn't really believe it, but he does make a very good point about data and how a lot of people choose to interpret it. But probably the best part is when he starts off, he says, you don't know what you don't know. And he goes through the long list of somebody that in probably 1990, all the things that they wouldn't have known about before then. They would have not known, somebody that was born in 1905 wouldn't have known about 8-tracks, cassettes, wouldn't have known about, computers, probably wouldn't have known about electric typewriters. Anyway, he goes through the long laundry list of things that we don't know. And really the biggest illusion we have is that we know a whole lot when there's always new things that are coming out, especially now. I mean, it's stuff comes out faster than you can shake a stick at it. But on this day in 2000, the famous last words of anyone out here, and that was that there's no reason why it cannot continue indefinitely. And, I think we heard it earlier in the show, preceding show. That's why they call it a cycle. And we're not talking about motorcycles or bicycles. Anyway, on this day in 2000. We come back. We're going to look at a lot of charts out here. Give me a call at 877-927-6648. Email me at path@tfnn.com. And, of course, post a message in the den.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And one of my subscribers here sent me a quote. He says, if you torture the data long enough, you will make it confess to anything. I heard it from my statistics professor a slightly different way, and that was numbers are like humans. Torture them long enough, and they will tell you anything you want to hear. That was the opposite of it. I actually tried to buy the URL for tortured numbers a long time ago. Every year I check, and apparently that's like one of the ones that's always perennially used on the web. But it never actually has a website to it of substance. I always wondered about it. Somebody's just camping on it, hoping that someone will spend a lot of money. We're going to get to stocks that are the biggest winners of the day. We just throw a party for them. Anyway, Activision Blizzard, the big popper, up here on volume through the previous high of 40 million shares with 42 million shares at this point. That's through the October 25th high. This one was very kind of much of a surprise to me because it didn't have much juice off the bottom. No one was talking about it, and they really didn't have that much in the way of new titles for Christmas to actually do well either. What they were doing is a lot of on mobile things, they call them in-app purchases. But they just had a lot of additional content that they sold to existing customers. And most of this content is just made by artists that work for minimum wage for a lot of these computer companies. They don't, it's not the computer programmer guys that get the big money. It's the artists, starving artists working at these places. And it's actually the cheap stuff to produce. And it's kind of hard because there aren't a lot of numbers to figure out how well that business is doing. But everybody was buying additional add-on packs to all the first-person shooters apparently last fall, and they did well. And that's the tough part of going after this. You had to kind of think that this high-volume high on October 25th with 40 million shares would get tested. So I couldn't have been short this thing, but a very interesting chart pattern, and tells you that computer gaming is still doing well. CBG, which is CBRE Group, nice pop, some decent volume, certainly through its previous high. Of course, this is now just going into a bigger gap out here, kind of like a lot of stocks that I'm seeing, and that is the downside, where there are a lot of people that are still trapped, or a big supply line, is really right here, which goes back to the 4th of January last year. And so now you got a ton of people that just didn't get taken to hell and back, all the way down to February 8th low at 22.74, wanting to get their cash back. Easy money, if there was any in that one off the bottom, is over. Columbia Sportswear Company. We've been talking about this. Some of these companies don't look all that bad. I think they're getting masked by Under Armour. But Columbia Sportswear, not too far away from Under Armour. Pretty nice day. You would have liked to seen a little bit more volume, and that's probably the worst part of it. This came back to the double gap right at about $51.50. So you do have a second one down here at about $48. But looks so far like that is a bigger trading range. HBM, which is Hudbay Minerals. Not familiar with this one at all. I'm going to have to find more about it. Nice pop up. Looks like it could go back up to the $10.31 high of May 1st, 2015. HDP, which is Hortonworks. Horton says a who, and Horton Works. I wonder if these guys have the same one. If I was looking to pull a short out of my hat, this one's got a triple gap right at $11 and opened up a little higher, pulled back. I'm not shorting an $11 stock, don't get me wrong. But if you were looking for a target to sell this thing off the bottom, if you bought it, I don't see any. It still had a high volume kind of bottom out here that was tested even with higher volume. So to me, this one probably just in a bigger trading range from $6.50 up to what we saw today. I'd find out more about the company, but for the chart pattern, that's what it would tell me. Infineon Corporation, INFN. This has come back and filled most of its big, huge gap down. Not quite the volume that you're looking for. Now, this one's up to 12.30 today, but it had a one-day bad hair day in July 28th, down on 21.5 million shares, back up on 13 million shares today. So that's kind of, you've had a nice day. You've squeezed any shorts that are probably out of that. And again, if you're in that off the bell, I would be ringing the register so quickly it would make your head spin. It is a OCOUL, nothing big on that quote. This one looks interesting. Quotient Technology, QUOT, nice pop. Volume pretty good, not as big as you would think for the candle and move. Back up 12.95, which is the December 1st, 2016 high. Volume is about the same right now. So you would have kind of liked to seen a little more. The big winner of the day out here was Sears Holdings. And is there anything going on out here? They're going to their 10th different strategy to save the company, and everybody loved it. And since this thing is perennial 50, 70% short interest, all it takes is something, anything, to run a few shorts. But again, the trend is your friend on this one. And there's absolutely no way in the world that I would be trading this other than intraday for something like this. And, of course, no real good way to get back in to the short squeeze on this today. But there's no way that you need to be long this thing. Like I said, this is, I think, the 10th or 12th or 18th different way that they've looked at kicking a dead horse. And, if you're a bunch of attorneys and other people in this ilk that just fly over these companies and pick their bones clean, there are certain CEOs that their whole job is just to slow the whole thing down and make a cadre an industry of people that surround bankruptcies very rich on the way down. What else do we have out here? SKX, a nice pop in Skechers. Again, some of these retail companies having some nice pops, mostly because I think everybody had just written them off as dead. Kind of hard to say that a tennis shoe company is dead. You can always come up with some new stuff and make it hot and hip again. I think when you get the funk of fluorescent lighting and the bad suspended ceiling that's got all the water stains on it, and the Sears and the linoleum tile floors that have all kind of got that UV fading like Sears, kind of tough. Pretty easy to put a new box around a pair of tennis shoes, maybe even get somebody to say something nice about them that's an athlete, and get your mojo back again. Very tough to do in retail space. Retail products are kind of a little bit better, easier to do. We'll talk about this when we come back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Are you there, Rich?
I'm here.
Good enough. Talking about TTMI, which I think we talked to you about when it was $13.50, and I thought it looked very good to $15. I think I sold it when it went through $15 at like 15, 10, or 20. Did you hold it through earnings?
I did.
Well, congratulations. I was a big chicken. I took the money and ran.
Well, there's nothing wrong with that. You don't go
No.
broke that way.
Nope. So what's your question here?
My question is, today it's down a little bit. Is this just a digestive phase?
Well, I think you're probably most likely. You had a nice day yesterday. My guess is that it's probably going to pull back down to about 1560, maybe 1570. And at that point, you probably could start maybe a potential ABC up, depending on the general market. I checked this company out a little bit. I think maybe a few too many shorts in this thing, and not a whole lot. But I think part of yesterday and today is up in this area is a little bit. I don't see that this just runs all the way up to 20 now. So I don't know if you want to hold. I think you said you owned it at like 1350 or something.
Correct.
Yeah. Which I think it was that day or the day before. All I remember is I think I bought it at 1350 and sold it at 1510. Just to look so good at that setup. But no, I just think it's pulling back, and I'll put this on my list. If it would get to like 1575, 1560, maybe 1575, 1580 on light volume, then I think that would probably be a good place to. I don't know if you added last time. I think that was part of our discussion.
No, I wished I had.
I bought it.
No,
I didn't. You already had your position, but no. To me, this is to holding. Just my risk reward wouldn't have me holding through earnings, but pretty decent risk reward if this thing pulls back to 1570, 1560 on light volume, and then you. I think if I go back and look at this thing, hang on a second.
Now, my TD Ameritrade screen shows that as of January 31st, the short interest was 19%.
Yeah, it's in fact. Let me pull up and see what it was the last couple of days.
Okay, thank you.
Where's that? There it is. Unfortunately, it always makes me think of too much information.
Yeah. You overthink it.
Yeah. Well, interestingly enough, it probably looks a little bit better. Yesterday, 45% of the shares were short. Someone was dumping on top of this thing here. So you kind of know where the short squeeze is going to start. My guess is this is going to probably pull back. When this thing, I think I was selling into this thing when people were screaming because on the 6th, 30% of the shares were short. I think that's what gave you your nice pop into earnings here. You found a lot of people on the other side. 45% of the shares, though, yesterday were shorted. I'll look at it tonight when I get my data. Maybe we'll talk about it. I'll try to remember it on Monday to bring it up. But if you got another 45%, then that's it. But you've got a lot of late to the party. Well, I guess probably this better than them shorting it down at 15, right? A lot of people piling on this one. But I like to remember days like that when I see a lot of people come in, because if this thing pulls back on light volume and then moves back up, you know where the squeeze starts, right? That's going to be right around this $17 level, and you can see really what happens to it in the movement. And I was talking about the dollar earlier, where I saw everybody piling on about $100.80. And if you look at the intraday of the dollar the last couple of days, you'll see that where the real war has been kind of going on in that. It's the same kind of thing. If you can remember when everybody's getting fairly bearish and kind of at least write it down or think about it, you can really see about how stocks or even other things where everybody's gotten bearish and suddenly it's starting to move against them. And, you can see how those things tend to move. Dollar index is 100.83 right now. Anyway, interesting company, like it. I wouldn't be buying it up here. I'd be waiting for a pullback. And I think with all the shorts you've got in this thing now, maybe it goes sideways for a few days. So my guess would be that you've got about 3 days on this one because you've got all these new shorts.
Yes.
And if they don't see some real movement on their side in the next 3 days, you could get one more leg up in this thing. So if I owned it here, I would hold my breath and count for 3 days. And if it doesn't go higher, then I'd probably sell it and try to buy it back at $15.75. But there's a good chance that if you got that many shorts, that they'll just jam them again. So you might get $18 out of this. Who knows?
Well,
but I don't think you've got any down. Huh?
As the cat in the hat would say, I hope that somebody buys their jiggers.
Right. But yeah, I think you've got. This is the first day, but I think you got probably 2 more days of this going sideways, and if they do not cover, they probably will on that 3rd day. And if you don't see any movement, then I would go ahead and sell it. So you got a couple. I think you got. What I'm trying to say is, I think you got a free roll for a couple of days that I just sit on it, and maybe some of these guys go ahead and pull sit on it. But much past 3 days, if you don't see a short squeeze to sell into, then I would be out of it and look at that $15.75.
Okay, David. I appreciate it very much. Have a good weekend.
Good luck.
Thanks.
You bet. Anyway, give me a call, 877-927-6648, just like our friend there. And, of course, all people that call me go straight to winning trades. Just a fact. Just a fact. Anyway, what else do we have going on out here? Where's my chart? Oh, need to get that back up here. Okay, let's take a look. Okay, we've got 2316 on the S&P cash. Volume is 2.35 billion shares. Not a big surprise that we don't have a lot of volume. What I'm seeing, though, is ridiculously light volume in many, many stocks and many, many EFTs. We started this about Wednesday, and I thought maybe we would flip over the last day. We haven't. But everybody, as far as I can tell, is still getting ready for some pullback of a kind. At least the option market makers are. So I will sit on my hands for the positions I have, but I do like them. But again, I'm not talking about the next day or two. I'm talking about the earliest options I have expiring do not expire until March, some into April, and I'm going to be going off into May, I think. So I've got mine's a much larger view that's going to take a while to develop. We'll be back after this.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Anyway, thanks for the call. Again, you can call me at 877-927-6648. You can email me at path@tfnn.com, or you can post a message in the den. And what else do we have out here? Yeah, that's about it. We look at Skechers last. Let's get back to SWIR. Sierra Wireless. Nice pop upon this one. Again, these things are back into these gaps. Now, this one has kind of filled this gap up to $25. 3.3 million shares, and looks like a bigger trading range out here. I don't see what else you can do on this one. If you wanted to buy it, look at about $20.75 on a pullback. That may take a little while, but that would be it. ZLTQ's Zeltwick Anesthetics. Nice pop out here, but it looks like a few people went to sleep up here at the high of 51.94. It's given a lot of that back in the low 48s now. Fairly decent volume. This thing, of course, broke out of that $39 level. It's been moving up here to this $51 level, but kind of looks like a little blow off. I would wait for this thing to come back into the $46 range if you're looking long on it. I don't see anything happening on the short side in it. Percent advancers, percent decliners. Did we do decliners already? No, we didn't. We'll go through these. General Cable, kind of interesting to see this one down. You'd think this, with all the buildings supposedly going on, this one would have been a wiener. It's been down the last couple of days. A little bit of a reversal of yesterday's bounce. CARB, which is Carbonite, the company that does all the backups, been on a tear since $6.50. Got up to $21.30 a few days ago on February 6th. Down with some juice out here today. Looks like it's going to fill this gap at about $17.25. It would need to consolidate a while if you're looking at it again. Cardtronics, giant move down on this one and wiping everybody out back through the $45 level, which takes you back to October of last fall. Down huge volume. It's blown everything out. Support probably comes in at about $43.50. And I don't know if there's more that you can say about that. Cerner, just kind of looks like this thing went back up to the gap, turned around and headed home like Ponzatani Phil. What kind of name is that anyway? And why would you give it to a giant rodent? Don't drive angry. Remember that. Down on heavy volume, this thing was on the, on the 2nd of November. Came right up to it yesterday, hit it down in a fairly large volume. Needs to test this 47 $1.01 low back from December 13th that it has not. CyberArk, again, this is kind of interesting to me as we talked about these stocks that tend to break above and out of an asymmetrical triangle. This one wasn't huge. It was a little, but it broke out before earnings and reversed after the after earnings last night. Not horrible out here. Could have been a lot worse. FET, which is Forum Energy Technologies, just back up to its big long-term gap. That gap goes back to the 28th of 2014. So this thing is probably now, it's had a good amount of overhead, but man, it's getting into the long-term overhead now. G, which is Genpack, back up to its gap down that happened with a ton of juice. This popped up, filled half of it. And again, if I'm going to pull the trigger on something, I'd love to see it fill half the gap to do so. And then this thing rolled over. I would have had to been sitting there watching this one. But this pattern, if you're shorting, is fairly powerful. If you get the huge move down and then move back up into the gap and everything's looking rosy, time to pull the trigger is not a bad time in the middle of that gap. I don't like stocks below $30, but that's just me. What else do we have out here? MX, magnet chip semiconductor. I don't see much in that. Let's go to a little closer one. Pier 1 imports. This thing caught a lot of people sleeping in the last earnings cycle. It's just down today, but fairly light volume. Again, some of these retail stocks not looking as bad as they have been in the past. PT, CT, little gap down, don't know much about that. Restoration Hardware, this one, every earnings cycle, this seems to be a new kind of disappointment for it. I don't think that it was earnings on it, just lower today. But again, still not bottoming out. Tom O'Brien's a big fan of this company, and he said they built the stores just too large. But don't know what else we can say up. Okay. TWTR. Mr. Twitter. Apparently the president's the only one twittering, maybe a handful of others. Still haven't figured out a way to make money. Still hate the fact that the CEO is running around sticking his thumb in people's eyes. And, this is a hard one to do. They want lots of shiny, smiling faces. And Twitter was kind of always more a steel cage grudge match, a mud fight. It wasn't a quiet place. It wasn't a safe space. And they tried to make it, the non-offending Twitter dumb. And it just kind of, I think people go there for a fight, don't they? They go there to be mad and yelling. It's kind of the WWF for people in front of their computers. That's just my editorial out here. Huge volume, of course, on the way down. No one likes the fact that he's the Jack Dorsey, the CEO of this and Square. He's got to pick a side. They don't like basically anything. And getting kind of miffed that he hasn't really turned this thing around. Everybody thought it would be the Facebook. They'd finally get in there and make this thing an earnings bonanza. It just never has been. UBNT, one of my favorite companies, unfortunately not one of my favorite stocks up here, came up on very, very light volume. If you're unfamiliar with this company, they're very big in making wireless hotspots that go into all kinds of retail locations like Starbucks or any else you go where you get free Wi-Fi and also get a free hacker at no additional charge with your free Wi-Fi. As a tip, don't do anything without a VPN or a HTTPS in the front of it, or you're giving half the time you're giving your data away to somebody else. Anyway, nice big pop down here, all the volume in the world. I love this stock back when it was $10, but there were so many rumors flying around on this thing. I could not buy it, and it took off anywhere. But man, talk about a lot of fake news on this thing back at $10. They had me believing the guy was part of the mob, was going to get bumped off by the mob, had been bumped off from the mob. You just couldn't. Someone was very good at getting the price down back at $10. We'll see you in the next break.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we wrap up some of the earnings out here from last night, Yelp, of course, down fairly significantly. Going to go right back into this gap that had on the way back up back on November 2nd. Kind of bounced off that on November 15th, went up to the previous high at $43.41. Did so with lighter volume, and that's pretty much the end of it. Energy was never very strong on the way up. Down, of course, going to be, 12.5 million shares. Going to be, 15 million shares by the end of the day, 16 maybe. And my guess is it just comes back and fills this gap down at $32.50. Again, all these social media companies have the exact same thing, which is, as we talked about in Twitter, how do you control a bunch of people sitting at home in their pajamas, if you're that lucky? Maybe they're just sitting in their underwear, spouting all kinds of stuff off, some of it real, some of it not. And that's it. How do you trust a bunch of reviews when half of them are maybe for the competitor down the street for a restaurant or anything else? And that has been the issue out there. Probably the the company that does it best is Amazon, because literally you have to buy something to see that and you get to see that someone truly bought something for the review. If there's no skin in the game for something like Yelp or a Twitter, if it doesn't cost them something to do something that may be deemed negative by the Lord of the Flies, what do you do? And that, I think, is kind of the difference between that. Now, in Facebook, you just have less friends, right? If you don't say things that other people don't like, kind of self-fixing. LinkedIn, I always liked LinkedIn a little bit better than I liked Facebook, because I thought Facebook might tend to be more of a fad. I may be proven right one day on that. But at least those are somewhat self-governing. I mean, you don't want to be a creep on LinkedIn. You're not going to get a lot of referrals, the whole reason why you're there to begin with. But on Yelp, a lot of reasons for people to lie. Again, you know, got to have skin in the game. Twitter and some of these other ones out here where you can just be a jackass. I don't know if there's a good answer for it yet. Someone will probably come up with one. But I don't know. Not kind of hard to figure out. Anyway, back to the gap on that one. Now, probably the one that that I thought was most interesting, although it didn't do all that much, was NVIDIA. Mostly because this company has an astronomical PE. Everybody thinks it's going to continue to go higher. I've written a little bit about it in the Tech Insider, where they may have a lot more competition coming their way. Now, it did test the previous high, 119.93, December 28th, with 57 million shares. You got into it just a few days ago with 19 million shares. So you did test a high with extremely light volume compared to previous highs. And, of course, the energy on the way back up from the January 18th low, not all that exciting. Now, is this going to fall off a cliff? The answer is no. But I think it is one of these things that could have seen at least a 6-month or even a 1-year high in this company. And if the competition is anywhere close to what they say they're going to be, this may be a bigger issue out here. The company, if you're unfamiliar with it, makes video cards for computer gaming. But those cards have been able to be used for artificial intelligence, better known as machine learning. Everybody thinks that they're going to be able to throw all these chips that they make in cars. My guess is that there's most likely going to be a much cheaper version of it, because everything they did was for graphics, not for cars. And that is the fly in the ointment. Keep an eye on this one. We'll see you Monday. Same bat channel, same bat time. Remember to sell when you can, not when you have to.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.